Ladies and gentlemen, we are gathered here today to pump our Bitcoin bags. Good morning and welcome to a special edition of Toxic Happy, I would say, where we are, of course, toxic towards scams. Today we have a guy that I really respect, and I think we can learn a lot from all of us in the understanding of the bull run. He is a finance sophomore, but I would call him a bull run professor. He looks on the Bitcoin blockchain with data, I believe, from Glassnode, and learns a lot about where we are and how far can we go. William, welcome to the show. What are you drinking today, mate?
Thanks a lot for having me on, guys. I'm drinking, we'll say, coffee out of the thermos. So,
hey,
awesome.
As a proper university kid should. Well done, sir.
Focus on the books. Puppy, so we are both done with the books. What are you having, mate?
Oh, yeah, I've been done with the books for some time. My quintessential Sierra Nevada Pale Ale. Can't go wrong.
They should be paying you because you drink that Indian Pale Ale every single time.
Yeah, pretty much. Unless when I'm overseas, especially like Africa or whatever, man, you sort of get what they give you. There's not a lot of choices. But yeah, not a bad deal. We'll keep that in mind.
Absolutely. So, William, we're honestly really excited to have you on, and I've been following you on Twitter, of course, for a while. You're one of the few people that I have a notification for, so I see every single tweet and reply and everything that you do. What interests me a lot is what you and Willy Woo, you are the two guys that I see together with Glassnode themselves that are publishing these, that looking at what the blockchain, the on-chain can tell us. Can you tell us a little bit about that?
Yeah, sure. So, obviously we all know with Bitcoin, we have this unique thing where we can go in and view everything going in the blockchain, which is very contrary to the current traditional financial system where everything is very obscure and opaque, and you need to be in the know to know, certain things that are going on. In Bitcoin, you could plug in a node and get all the information and data that you want, right? And so Willy Woo really was the pioneer of this this on-chain analytics, where he goes in and views all the capital flows on the blockchain. And so, I've learned a lot of what I know from Willy, but as well, just playing around on Glassnode. Glassnode is probably, in my opinion, the best in business data provider for these on-chain analytic services and different metrics. And so they came about in about, I think it was 2017, late 2017, early 2018. Since then, we've seen like an explosion of new metrics. I think they now have over 100 metrics on the website. And so, like I said, there's this interesting thing with Bitcoin where you can see everything going on versus, traditional technical analysis that you would do on an asset, momentum, all these different kinds of things. You can go in and see all of the capital flows and see, what the fundamental movement of all the capital through the network is doing. And so through that, you can get a good understanding of, especially through the different metrics that have come about to serve different purposes, where we are in the bull cycle, where we are in terms of correcting, how overheated we may be, what kind of players are moving into the network, who owns what portion of supply. All these different kinds of things are visible through the blockchain. And of course, you need to understand how to sift and organize the data, which is where Glassnode comes in, as they have, best in business data scientists and I like to call them data archaeologists. They are going in and clustering these different addresses and using different data algorithms to sort through the data and come up with these different metrics. So that's what I've really found fascinating the last 2 or 3 months, especially. I've really gone in the trenches and tried to really understand all this stuff because there's a lot to grasp here, but I find it really fascinating, especially as we move towards this new digital economy, right? Because if we're talking Bitcoin's going to be the global money, then you're talking about being able to view all of the capital flow for the entire world. So I see that becoming something very important in the future.
Nice.
So how do you go? Look, man, I'm not going to do the full starting story, but most people that come into the space, It takes them a year just to realize that they're owning shit coins and need to get out of it. How do you so quickly go from learning about Bitcoin, all of a sudden you're on glass nodes, Willy Woo style, and breaking down numbers? Have you always had a thing, for numbers growing up, where you're like a math prodigy in a way?
Actually, no. I failed my math class in my last year of high school. I had to retake it over again online.
I don't believe you. I don't believe you.
No way.
But it was after last year when we had the big COVID crash, and I had been interested. Everybody knows Preston Pish. I had been like an avid listener of Preston's podcast and getting into the kind of Warren Buffett style with, free cash flow based analysis on companies, which is very logical because you're just, people like to analogize it to like it's a money printer. You're paying a certain amount for the money printer, and you're understanding how much money that money printer is going to give you into the future. So it's this very logical way to evaluate what your return will be on a company in the future versus, just going off of momentum of where a stock is moving. But when you try to do this kind of analysis on a company, what you come to realize, and I think this is what Preston realized, is that you're assuming that there's sound money that you're making economic calculation with, right? And so that's the reason, in my opinion, that value investing has way underperformed growth and momentum investing, because you're essentially building a house with a ruler or a meter stick that is fluctuating every day, and you can't make sound, hard economic calculations. So we can get into this, but I see post-hyper Bitcoinization, the free cash flow based investing becoming very prominent again, because you're introducing a new a sound money, or a ruler stick that isn't changing size, if you will.
Don't be so modest there, because we know you're the brains behind the operation of Pierre Richard and Preston Pish. Now I know where all their tweets came from.
Yeah, right.
What you're saying is when we have sound money and when we have a true free market interest rate, maybe I'm putting word in your mouth, but this is what I'm hearing. Then you once again can do value investing. But this free market interest rate that we're seeing currently in Bitcoin, there's different places where there is a market for interest rate. We're seeing it like 12, 15, 20%. Is that what you're seeing as well, or?
Yeah, absolutely. So I think Foss had touched on this when he was on the pod, whenever it was a couple weeks ago, but we can hash back over this whole contango thing. So I put out a piece, I don't know, it might have been a month and a half ago with Preston, and we kind of ran over this whole idea, which, like you said, it is a free market interest rate, but this whole contango thing is bullish for two reasons. So, we'll start from the very beginning. So the whole contango idea is just very basic, because I was very confused about this at first, because I think some jargon gets thrown into it and it can seem confusing. All it means is that the futures are trading at a premium to spot, and then the futures. So, for example, Bitcoin's at 55,000. The 1 month contract for the futures is 56,000. And then the month after that is 56,100. So there's an upward sloping curve in the price for the futures. And so where that's important is because these fixed income investors that are yielding absolutely nothing, they're yielding negative in real terms in treasuries. They can step into the Bitcoin world and lock in this risk-free, like you said, 15, 20% when you go further out onto the futures curve, right? So essentially what you're doing is you're buying the spot price. So you're buying Bitcoin at $55,000 today, and then this isn't the real number. I'm just making something up for the sake of conversation. Let's say in 3 months out, the futures contract is 56,000. Okay, so you're locking in that $1,000 difference, because through the futures contract, what you're doing is you're creating a contract that gives you the right to sell Bitcoin at a higher price. So you can take advantage of the future trading at the spot, because you simultaneously are buying the spot while you're going short futures. So there's essentially no risk other than the counterparty risk that you're buying the futures contract on. And this is another thing, but this is why on like Binance and FTX or Deribit, the futures premium is way higher, in my opinion, than like CME, because there's not as much counterparty risk that you're taking on. And there's also not as much access to leverage, which is another reason why on these other platforms you can do 100x leverage on the futures, that the premium is trading way higher than CME or something. So anyway, for fixed income investors, this is a great way for them to actually get some yield where they've been deprived of yield for the past, who knows, I don't even know how long, as long as I've been interested in this stuff. And,
since before you were born, William.
Yeah, sure. There you go. And so for them, this is, basically free money, because even if, let's say the spot price, right, we were saying you buy it at 55,000. Let's say the spot price goes down to $1, right? Bitcoin collapses 99% or whatever. You still have through the futures contract the right to lock in, the right to sell at that higher price. So even if the spot price goes down, you still have locked in that difference when you initially bought the spot and went short futures, if that makes sense. So there really, like I said, there really is no risk other than the counterparty risk for you, like I said, that you're doing the futures on. So this is bullish for Bitcoin, because to do this, to lock in this essentially free money, right, you have to go long spot, aka you have to buy Bitcoin. So if you want to lock in these growing spreads that are going to increase as the volatility of Bitcoin goes up, which is likely to happen throughout this bull run. We saw it, the past couple of days. We've seen a lot of volatility, and so these futures are going to continue to get bid up, and the spread between the spot and the futures is going to continue to widen, and so that's just going to draw in even more capital to take on this trade, which is going to lock even more Bitcoin up until the futures contract expires, because, like I said, they have to go long spot to do the trade. So that's one very bullish aspect of the whole contango thing. The other aspect is, like you said, we currently the risk-free yield that we're using for economic calculation is completely manipulated. So when you do any kind of discount cash flow model on any asset, stocks are the most well-known for this, right? You're using right now, you're using usually the 10-year treasury, which, we know is pretty much completely manipulated by the government. They just continue to step in and buy bonds and continue to push the yields down so that asset prices continue to go up. Because if they stop buying the bonds and the yields go higher, then prices of assets are inverse to that. So if the yield goes up, asset prices come down. So they have to keep buying the bonds to keep pushing the yield down so that asset prices continue to go up. And so that's part of the reason why, in addition to just money printing in general, you have these crazy valuations can be justified, because when you're doing these discount cash flow models with these manipulated interest rates, they're not crazy. Like, they're crazy. They're obviously overvalued in relative terms. But when you're using this manipulated discount the fixed income rate, it's not that overvalued in that sense. And so where this whole contango thing comes in is you're using this new risk-free rate for your economic calculation. And of course, when that goes higher, and we're talking about, like you said, 15-20% crazy stuff, then the asset prices are essentially going to collapse if the broader market recognizes this risk-free yield as the real risk-free yield for economic calculation, right? We do in our little, it's easy to get caught up in our little Bitcoin echo chamber, but the broader market isn't even really paying much attention to this. We're starting to see some, like JP Morgan published a report on this. I think it was last week it came out, but, they're starting to wake up to it. But eventually the theory is that, in years from now, the broader market will recognize this risk-free yield, which is, by the way, essentially a byproduct of hyper Bitcoinization. So it's going to continue to grow. And so that's where the article I had put out with Preston about this, I had called it the black hole effect, because that's what essentially is. It's this positive feedback loop that's growing on itself. And as that happens, eventually, if the broader, like I said, if the broader market recognizes this as the risk-free yield, then you're going to see asset prices collapse. So, for example, just a very round number, if we're talking about 20%, which isn't that crazy, like you said, if you can go on multiple exchanges and lock in 20% right now easily, if you're using 20% as your discount rate, then it's going to cause like an 80% stock market correction. And the math I'm getting from that is the average PE ratio of the S&P 500 is a little over 33. And so to get your return on your stock, you do 1 divided by the PE ratio. So when you do that with the current 33, it's over what the risk-free yield is, right? And so you can justify that there's some risk premium that you're getting. You're getting a little extra yield above what the risk-free rate is to buy a stock when you're taking on risk to do so. But if these yields blow out to 20%, then you're doing 1 divided by 20. You're doing 1 divided by 5 to get that 20% return. So that's right there. That's an 80% stock market correction. But you're talking about equivalent to the risk-free yield. So like we were saying, the stocks have to trade. Your return has to be at a premium to what the risk-free yield is, because you're not going to take on risk for a 10% return when you can go over here and get a 10% return with no risk. That makes no sense. You're going to say, I need an extra 5-10% return to justify taking on risk, right? And so in reality, if we saw the discount rate that investors in the broader markets are using for economic calculation go up to 20% plus, then the PE ratio of the stock market is going to have to fall significantly lower than 5 to add in that risk premium that you're taking on for stocks.
So quick question here, real quick, because like you say, and as when Preston first came up with this, we're talking to him or hear about him talking about this risk-free type deal. Now imagine taking this to some major business owner and say, listen, I got a way to make you risk-free, 15 upwards of 20%. All you got to do is buy the spot, short the future. What do you think? The first question on my mind is how? What are the mechanics behind this? Who is setting this future price? What are the mechanics behind it? Who's behind this? Because as we always say, nothing in life is free except for obviously Bitcoin contango. So what are sort of the mechanics behind it? Who's setting that price?
Yeah, that's a great question. It's something that, I don't even think Preston really knows. It's been something he's been trying to get some answers to. But Plan B, I've talked to Plan B a little bit, and he says that he thinks it's the leverage. So that's an interesting thesis because, and he's not the only one. I've talked to a couple other people that have said that as well. So it seems like that's the most recognized theory behind why they're trading at such a premium, because of course there is no storage cost, right? Traditionally, futures trade at a premium because there's storage cost, and there's no storage cost to Bitcoin. It's just digital. So yeah, that seems like the most likely thing, and that can be kind of supported when you're looking at these unregulated exchanges like offshore, Binance, Deribit, FTX. They're trading at a much higher premium than CME is, right? Because you can't go on CME and get this crazy access to leverage because it's in the United States and they're leveraged and they're no fun. So I think that's why you see this much higher futures premium in these unregulated exchanges. But yeah, it is something that we don't know for sure, but it is there. And as the volatility increases, we're seeing the premium continue just to get bid up. Another theory I've heard is the possibility of some people can't get exposure to Bitcoin directly through spot, so they might be doing it through the futures. So it's kind of like a regulatory restriction thing. It could be a combination of both. Who knows, right?
I like that one.
I believe you're onto something there, William, that there are organizations that by charter cannot start buying and self-custodying or even holding the real Bitcoin, but but they can buy the future and then do like what's it called, perpetual swap, where it just keeps going.
Right.
So kind of like that's a way that they're invested in Bitcoin. There is a little bit of a premium, but if there's a lot of money that's only allowed to invest in Bitcoin through the futures, it drives that future price higher, which then drives the spot higher because of the contango. And John was having a question that's very relevant. I think a lot of people think about that in the chat, even though the amazing chat we have already answered it. He was saying, but how does the little guy do this contango trade? But the thing is, doing the contango trade gives you you invest fiat and you get a return in fiat. So you don't get the Bitcoin upside, but you can get, say, 15% return on your US dollars.
Exactly.
But have fun trying to save money on that and make money on that, because they print 40% more every year at the moment. So
exactly. Yeah, you make
but
a good point. You're missing out on the upside, but you're also missing out on the downside as well. So I think where you're kind of getting at here is this trade isn't for the plebs, or this isn't for hodlers, right? This isn't for people that have deep conviction in Bitcoin. It makes much more sense just to hold Bitcoin. This is for fixed income investors and hedge funds that they're kind of skeptical about Bitcoin. They don't want to take this super long position. They're just looking at this and saying, oh my gosh, this is free money. I can literally just, like you said, buy the spot, go short the future, and just lock in a free 20, 30%. And
yeah,
and so that's who this trade is really for.
My
I
favorite
agree.
part,
It's 100% fiat trade. It's you invest fiat, you get a return in fiat. You don't have Bitcoin upside or downside. It's a totally different group of investors that can even hate Bitcoin and not believe in it, but they can get a fiat return. But what's important for us, and you said it earlier, is it drives up the Bitcoin price. Puppy.
no, it's one of my favorite things about it. I love the fact, it's the self-licking ice cream cone, man. You lock up these Bitcoin, more and more get taken off the exchange. Okay, boom, prices go, more people come in, and these are the people that are going to say, and let's be honest, these are the people that have been buying bonds for years, because guess what? That's what your father did. So now, guess what? They're seeing this. Holy crap! What is? So they'll see the fiat. This is their gateway drug, the little fiat gains, and they say, well, what the hell? Why am I not buying this directly? Why am I not just?
Yeah, and as well, they put in $1 million, right? A lot of investment firms do like test portfolios. They say, okay, we'll put in $1 million, and then they're like, oh my gosh, this worked. I got 20% for free. I'm gonna throw in 10 million. And they put in 10 million. They're like, I need to do some more, because all their other capital is sitting in negative yielding bonds. So yeah, I think it's this interesting thing where it's probably just the tip of the iceberg. And just from like the data standpoint, the hedge funds are definitely doing this. You can go in and there's this data provider called the Block, and they essentially go in and they analyze the futures open interest and like which different entities are participating in the futures. And so you can see the hedge fund participation in futures has gone up 16 times in the last 12 months. Crazy.
Oh, because I was going to ask you, do you have any indicators on chain about how much money is coming in this contango trade? Go ahead. This is interesting.
Yeah. So on chain, not as much, but the Block, they go in and they analyze the futures markets. And so, yeah, you see the hedge, first of all, the futures market in general is up like 10x versus where it was last year. Crazy. I think it's like north of 50 billion. It might have dropped off a little, obviously, after the crash this weekend. But when you look at hedge fund interest, yeah, it's up 16x in the last 12 months. And the very interesting thing about that is that when you look a little bit further, you see hedge funds are dramatically net short, like not even close, especially compared to other entities that are participating in futures. Some entities might just be hedging, but it's very clear what's going on with the hedge funds because they're dramatically short. And so what that entails is, like we were saying, that they're going short the futures, and then there's no way to prove this exactly, but it seems that they're also locking up the spot to do this trade because it's not even close. When you look at the hedge fund open interest in the futures, I mean, they're like 75, 80% short. It's crazy.
So it's funny because hedge funds supposed to be smart money, but at the end, it's funny with Bitcoin. There's no one as smart as the plebes, obviously, because we front ran the so-called smart money. But yeah, they could be long overall, but they're doing the contango trade. Interesting. I want to get back to one thing you said earlier, which I think is really, really important. And that is that as we spoke about the higher free market interest rates that are way above the artificial 0% or 0.25% interest rate, or negative some places in the world. Then, as you said, once that is reset and Bitcoin takes over as money of the world, and we get that interest rate, which is free market much higher, stock markets and real estate will crash. And that's why personally, like, I don't hold any stocks or real estate anymore, because not only is it like, oh, it's going to be not going up so much, but I believe it will crash. Not this year, but it will crash when Bitcoin takes over as money of the world. And that becomes the interest rate. Then that's when you'll see the crash in these assets.
Exactly.
I think.
And no, exactly. And I've talked with really bright minds like Preston, and Preston said what you exactly said is the reason he doesn't own a single stock. If you ask him, he'll tell you he doesn't own a single stock, and that's why. Because this may not happen this year, but it eventually, granted, Bitcoin, nothing crazy happens with the protocol and it collapses, which none of us here think is going to happen, obviously, but just had to throw that out there. Then this will happen eventually. The market will recognize this as the new risk-free yield. I wanted to touch on one other thing. I hate to go back, but you had mentioned about the plebs front-running institutions. I had made a post this morning, and it was actually describing this exact thing. Let me see if I can tell you. So what it was doing is it takes a look at the addresses of different sizes, and it tells you the amount of supply held by these different addresses. So I wish we could screen share here, but you can see this dramatic increase. It's at the end of last year, really about midway through January. You see this.
Will, we can screen share. I don't know if you can screen share, but I definitely can. If you send me a link, I can screen share that. We have a private chat here if it's something I have access to. I don't know if it's one of your many.
Here, I think I just sent it to you. Tell me if that works.
Oh, you did. Yeah, let's
Cool.
Let's pull that up. Perfect. Will, you are the first guy of our guests who found out how to screen share. Wonderful.
Awesome.
This guy is he's young and he's so smart. It's awesome, Puppy. This is a privilege.
Listen, when I was 19, dude, I was playing sports in college, and I don't know, doing beer puddles. This guy's
there you go. Hey, well, look, in your defense, I have been stuck home for the last 12 months, so that probably has a lot to do with it.
Fantastic, man.
Yeah. So if we're looking at this chart, so you see this pink line. And so this pink line is the balance, Bitcoin balance between 0.1 and 1 whole Bitcoin. So it's the amount of supply of a portion of the total supply that's held by wallets of that size. And then this green line is supply held with balances that have between 100 Bitcoins and 1,000 Bitcoins. And so you can see, since the beginning of May, I like to call this the plebs. They've continued to stack steadily. I mean, they sold off a little bit here. They sold off a little bit here, but generally they just continue stacking all the way through the last 2 years. You look down at this green line though, and this is big money. This is, institutions, high net worth individuals, and it's trending down. And then right around here at the end of January, you see a little increase here at the end of the year, but really at the end of January, moving into February, which is interesting because it aligns with when Tesla bought. So that might have been a big wake-up moment for a lot of these people. But at any rate, you see this huge just shoot right up in the amount of supply held by high net worth individuals. So I think this is really interesting because, like you said, the plebs have front run the big, the high net worth individuals and the institutions this whole way. So it's really good to see that.
Yeah, so I happen to know that end of January, that was Puppy starting, like, finally being convinced and buying up heavily. He's clearly he's driving that, the whale
The
numbers.
secret's out. Yeah, I love when I post these charts and people, for example, I'll be like, X amount of Bitcoin was withdrawn from exchanges, and then people comment, "Oh, sorry, you saw my exchange. Didn't mean to do that." It always makes me laugh.
Yeah, like I think actually I saw Willy Woo tweeted out this morning. Obviously, Bitcoin Twitter is one of the first things I look at before I really wake up, and he was saying something about like humor. Humor is let me find it. Puppy, let talk while I find the Willy Woo because I don't remember it.
He was
Say
talking
something.
about VJ's tweet about Dogecoin, and he was saying the bearish case for Dogecoin instead of the bullish case for Bitcoin. Is that correct?
So Willy Woo said, "The world gets boring with no humor," and that is since Puppy and I can't study the on-chain blockchain, we're here to fill the void with humor and give people a chance to laugh at us. That's what we do.
There you go. That's important too.
It is. Oh, and now Puppy had enough. Puppy had enough.
He
didn't want to take that anymore. He's right now going to check his whale addresses and see if the thousands of Bitcoins are still there. But that gives me a chance to ask you some more questions, William. I want to go back to so what I find really interesting and exciting. So I'm very interested in the bull run anatomy, as I call it, and that's why what you do and what Willy Woo does, they are very important pieces of information that I use in my analysis. So tell us, where are we in the bull run? What does on-chain tell us about where we are in the bull run? And because some people think because we are flat for 30 days, then it's all over. And also, how far do you see that we could potentially go? Please.
Sure. Do you mind if we do some more screen sharing?
No, let's go. Let's.
Right,
you're bombarding us with knowledge here.
1 second. Here we go. Get on Glassnode here. All right. Can you see?
Yep. I got it. All right. What we got here?
First, we're going to pull up. So these are the HODL waves. This is one of the OG on-chain metrics. Let me just zoom out here. So what this is showing is the portion of supply that's held by different size, different aged holders. And so what you see is at the bottom of the bear market, you see this spread right here, and these are older addresses. No, these addresses down here are younger addresses, like these very dark colors at the bottom. And so what you see is at the bottom of the bear market, the short-term holders, aka retail, and people that don't have strong conviction in Bitcoin go away, and you see the long-term holders really take up a larger portion of supply, which means that they're accumulating. This is aka smart money. Then we get into the bull run on the way up, and you start to see these spikes in the smaller, the lower time frame addresses. And so what this really indicates is that towards the end of the bull run, we see short-term holders come in as long-term holders begin to sell off. And so when we look at that in comparison to this run, we still have a ways to go in comparison to, this is 2013 here, this is 2017 here, this is where we are now. We're actually seeing a decrease here in retail holding, and that will lead me to this other chart I'd like to pull up. So this chart that I'm about to pull up is going to show you the holding of shorter term holders and the spikes that you see during different bull runs. So in each run, you see really three distinctive. Excuse.
Yeah, sorry, I didn't have a chance to mute myself there.
No, it's all good, man. Yeah. I got bad allergies right now.
Right.
So here we got these are short-term holders. And so each bull run, you see these 3 huge spikes. And so you see 1, 2, 3, 1, 2, 3, and come here, you see 1, 2, 3. And then here, this was the whole plus token scam, the Chinese scam. I don't know if you remember that, which was basically, it was basically a Ponzi scheme, and they're locking supply up artificially, which is why in previous bull runs you see this very smooth, almost like cup formation in the price. Here we have this really ugly, spike up here somewhere in the middle. That's what this was. This is an artificial pump caused by the plus token scam. So that's what this spike is. So I don't consider this a real spike. But up here, this was our first spike. We saw it at the end of January, and we're still in this kind of consolidation phase where we haven't seen the shorter term holders come back in yet. Which this is what I'm looking for, is another big spike like here, here, and here. But we're still cooling off after the first spike. So that's one thing to look at in terms of the behavior of holders. Another thing we can look at is this metric called dormancy. And so the way you can think of this is,
William, let me just ask you, the graph you just showed, so we're looking for the third spike potentially. Of course, there's no guarantees, potentially be the telltale sign of this is a top. But do you count the one in summer 2019 then as well? Or did we just finish the first of the 3? What's your expectations there?
Yeah, I wouldn't count that one because, it had to do with the plus token Ponzi scheme, and it wasn't really organic price movement. It was pretty much manipulated by them locking up coins. And then, of course, they were taken by the Chinese government and then sold onto the market, which is why we saw, price decrease since then. All this price movement in here was really inorganic in this area right here. So, yeah, I would consider that an outlier, and I think we're still cooling off after just the first spike.
And are you comfortable saying that we will see a third spike? And why is it 3?
It's a good question. I think at the end of the day, it just kind of comes down to market psychology. I'm not sure why it's exactly 3, but, I do try to go in and I just look for patterns, and there are, there have been 3 distinctive spikes in the previous bull runs. So, granted, maybe we don't see 3, maybe we see 2, maybe we see 4, but we're certainly not at the end. We certainly have another, at least 1 or 2 to go here, because that's just how the market has behaved in previous cycles. And you'll find with Bitcoin, it moves very mechanically, almost like which it is programmed. The price is very, programmatic, and it behaves just unlike any other asset, in that it has a lot of these fractal patterns. And so I think that's one of those fractal patterns that you've seen in previous cycles.
So what do you think? Because I think you just said you watched the Greg Foss episode. One of our favorites here, man. Love that guy. And it's funny because he uses the credit default swap market to sort of figure out how he would price Bitcoin. Which what he says right now, currently he believes probably 110, 120 on the low end to 160 should be current value. What numbers do you use to come up with what you believe the current value should be and where it's going, and what do you believe it is?
Yeah, that's a very good question. So first of all, the numbers that Foss put out are, they're gonna go up as CDS swaps. The values of them change. But I think he brings a very interesting perspective there. And we've heard of different kind of pricing models. For example, like Plan Bs based off of scarcity. I think he brings his expertise in the credit markets, and it was a very interesting way to think about valuing Bitcoin. Me personally, what I do is I don't have any specific numbers, but what I do is I look at these different metrics, right? And I look at the ratio in comparison to where they have reached in previous cycles. And so we can get into a couple more if you'd like, but a lot of these metrics are pointing to, as of right now, upwards of 300,000. And that's just based off of taking the ratio of where they are now versus where they've topped out, and as an average over previous cycles, and that's just across several different metrics that I'm looking at on chain. Another model that I like to use for the tops is Willy Woo's top cap model, which it's a moving average, which basically uses all the price of Bitcoin. And it's proprietary, so I don't know exactly how the math that he uses in there, but here, let me pull it up real quick because this is a really cool chart. It times the tops almost perfectly. Oops.
Angela, I think we found a new producer for the show.
Yeah, no, absolutely. But you know what? I don't think I don't think we can pay him, dude.
We can't afford him. We can't afford him.
We can't afford him.
Here we go. Price models. Okay. So see this. Let me just click these out so that it's better, less noise.
And while you're doing this, because I know you can multitask, please think about this one. How in the hell does Greg or you or anyone else, Preston, how do you factor in, even Plan B, how do you factor in all the money printing going on? How do you factor
absolutely.
in? How do you factor this in?
It's a great point. It's basically like throwing on gasoline on a fire. I mean, that's why a lot of people like to talk about super cycle. I mean, I'm not a huge proponent, yes or no, of the super cycle, but it's something that is possible for sure.
But William, we want answers. We want answers, and Pubby can handle the truth.
And we want numbers. We want you to tell us it'll be $1 million by June. Okay, that's all we want.
That's it, and the live stream.
Yeah, let's put you on the record. Let's get you to say something you're gonna regret.
This is absolutely financial advice to anyone listening.
You could put me down for 300,000 by the end of the year.
Yeah, see, that's what we. Wow. But no, let me help you there. Well, let's say 300,000 minimum by the end of the year, right? That's what you mean. Yeah.
Yes, that's a great point because Plan B's model, right? People like to get caught up on the 288 number. The 288 is an average.
Yes,
so that's including the price, before and the price overshooting, and then the price running down afterwards. That 288 is just an average value. So historically, Plan B doesn't like to talk about this because it completely, just will raise your eyebrows and you'll be like, oh my God. But each cycle, the stock to flow model has overshot by at least 2.5 times. So if you're talking about 288, you're talking about 750K to 800K in the final parabolic advances of the cycle as a blow off top.
Wait, are you saying 2.5 times the S2FX that says 288, or 2.5 times the 100,000? You're talking S2FX.
Yes, S2FX. Yeah, it overshoots it by that much in the previous cycles.
So you're saying American HODL's got an easy victory over Peter McCormick, is what you're saying?
Yeah, I think he's in the money.
Yeah, he needs it back.
So Clemente the Third, with numbers like that, you're welcome back anytime. We like them, the moon juice and the moon goose.
There you go.
And the scarves are armed for episodes like this. So 700,000-800,000, Pubby, it's out there. I like it. I'll take it. What I'm really interested in, William, is so in terms of the bull run, we've always seen like significant corrections after the halving, bull run, FOMO, blow off top. What's your thoughts on that? Do you expect to see like a 40-50% slap in the face after the top, or do you have any like opinion on that?
Yeah, I don't know, because part of you is saying that we have these institutional players that are going to kind of dampen the volatility on both sides. So you see this phenomenon where when price shoots up a lot, part of the selling is these hedge funds that have new positions in Bitcoin have to rebalance. So, I think ARK Invest has been one of the largest that have come out on record and say, we can't hold more than 10% of Bitcoin. So if if we take a 5% allocation to Bitcoin doubles. Well, anything over that we have to sell, like just by regulatory restriction, which they may not want to sell because they know this thing's going crazy, but they have to. So that's going to be some forced selling that we do see towards the end of the cycle, especially as we get towards the end of the year and funds want to lock in their profits to be able to put that down and say that they 5x their money in a year through owning Bitcoin. So we'll see some of that forced selling. It's just a matter of, I think there's this big misconception about the cycle tops that they're caused by a bunch of sellers coming in. And this sounds very similar, but it's a big distinction in that it's not caused by a lack of sellers. I mean an increase of sellers. It's caused by a lack of buyers. So you can basically think it's this thing that's pushing the price up, right? And so when it's pushing up, price goes higher, and then there's less demand, price falls, right? It's not that there's the sellers pushing down, it's that the buyers are pushing up. And so when you run out of steam, when you run out of momentum pushing price up, then that's when you start to see cooling off, and you start to see it's very indicative that there's a lack of demand. And so it's hard to say, if we start going really vertical towards the end here, and we start seeing like a $25,000 day, $50,000 day towards like the very end, there's not going to be demand to come in and buy a vertical line. Like, let's just be honest here. So that could play a part in like being kind of a catalyst for one of these major corrections. As far as the 80% correction, I don't know if we see that, because we have all these models now that are coming out, like Plan B's model. If enough people recognize it, they're not going to try to front run the next halving. They're going to try to front run the next 5-10 halvings, right? So that's one interesting thing to keep in mind. And then also, I would keep a very close eye on the dollar and what's going on in the broader macro in that world, because I like to just look at the on-chain stuff, but it is important to take a look at that stuff, because if the dollar hyperinflates in the matter of weeks, well, I don't know if we're going to come back down, because people are going to be looking for an escape valve. So that's something to keep in mind for sure. In addition to interest rates, like this is very unlikely, and the incentives are set up that there's no way that, in my opinion, that they'll do this. But, granted, it is possible that they'll spike interest rates, and that could be a catalyst for the end of the bull run, right? So those are all things to keep in mind. But long story short, I know I was rambling a little bit, but yeah, I don't think we see these 80% corrections that we have in the past, just because we have all these new players stepping in that are holding for the long term, and they're just going to be looking to add more to their position because they have these 5-10 year horizons, versus in the previous cycles have just been retail that are quick to retail. You tend to see is very subject to market psychology. So when price runs up, you see, this huge FOMO in, and people are like, I got to buy, I'm missing out. And then on the way back down, when we start to see these corrections, everybody sells, because everyone's like, I need to sell before the next person sells, right? Which is contrary to saying I need to buy before the next person buys. When we come down, we say I need to sell before the next person sells. And so that's why I think we've seen these huge corrections in the past. But when you have this down stop that they're saying I'm not selling no matter what, because I'm holding on to this thing for 10 years, and you're seeing a large enough amount of supply being held in those type of entities, I think that will really serve as a backstop for any kind of giant correction like that.
I think something's interesting. This is just to go back a bit with Contango, as you call it, this self-fulfilling prophecy in a way, or
right,
the self-looking ice cream cone that it just builds upon itself. And I call this sort of an inner ring, this spiral down. And I've heard you in other podcasts or in your writings also, because there's another layer to this effect. And Michael Saylor's taken advantage of it. Pierre Rochard brought it up, a speculative attack on the dollar, man. So you compound that with, I just got a 0% loan for almost $1 billion. And as Preston Fish, I think, has said, you can get negative rates on that. Now imagine how do you compound that? What math do you put into that?
Yeah, that's a really good point. It just goes back to like the whole trust in the dollar thing, and when enough people recognize that the dollar's gonna end up being worthless in the next 5-10 years, which is a long time horizon for that to happen, in my opinion.
Mhm.
Yeah, you're gonna see all these people say, "I'm gonna leverage this failing shitty currency against the hardest money in the world," and why
Right.
wouldn't they? If you can lock in right now, if you can lock in a fixed rate and on I mean not just in to buy Bitcoin, but in general, you're going to be able to pay that back no problem because the dollar is going to devalue way faster than the rate that you're locking in. So it's a no-brainer. I'm sure if one of these big institutions like Apple or something came out, they could easily like issue free money, which I don't think they would do that because the first thing they would do is um, you know address their massive over $100 billion cash that's melting away right now. So I think that would be the first thing they did. But if they went all in on the cash, I mean, theoretically, it would make no sense for them not to leverage the dollar against Bitcoin because, like you said, they could just issue it at a negative rate. So it's this cycle is so fundamentally different than the previous ones because of the macro backdrop. We this is what Bitcoin was made for. Bitcoin was made for being a scarce asset, and it was literally created as an inflation hedge, an alternative form of money against the dollar. And Satoshi, was very open about that. The chancellor banks are on the brink of being bailed out. That just it's kind of a preface to what was going to happen in the future. So yeah, this is what Bitcoin was made for, and it wouldn't surprise me at all to see this cycle just be completely different. But the other part of me, as much as I think that's true, you know, I have to just follow the data. That's my big thing is I try to just stick to what I'm seeing in the data. So I kind of follow it, day to day, week to week, and kind of track, what's happening as is. I'm not against the super cycle. I'm not seeing anything in I take that back. I'm seeing a couple things that are insinuating a super cycle, but in general, there's nothing that's looking super different compared to previous ones. But that can quickly change, right? That can change in a matter of days or in a week. So it's just something that you have to monitor from day to day.
That's
So
really interesting, and this is something that
it's
I'd
not as
love to hear. Like,
interesting as what I'm going to say. Hang on one second, man.
dude,
At
I said the
example,
first word here. I dropped in. You start talking
you had
after
you had
me.
the
But
first word.
all right, I'm nice,
This is,
puppy. I'm nice. Go
you are
ahead.
nice. No, listen, man, because you see us old guys here. Hey, man, it's been 30 years since we got to party Animal House style at university in the frat houses and all that. So yeah, what's it like? You get to talk to a girl and you bring up Bitcoin. How long does she hang around for the conversation? Is it 30 seconds, a minute? Because when you find one, you hold on to her, man. You hold on to her.
Yeah, thankfully, I've had the same girlfriend since before I graduated high school. I've had her since I was 16. So I got her on the Bitcoin train. She's like tripled her money in Bitcoin, so she's loving it. She's all over it. So she lets me ramble to her. So that's great.
It's like my boyfriend is smart. He helped me get a 3x return.
Yeah. So yeah, she doesn't have a problem with it. I'm sure if we were in a bear market, it would be a different story. But
Yeah, I can't wait. Hey, we're gonna meet in Miami for sure. I know you're going down there.
yes, sir.
It will be fantastic. Oh, please don't call me sir, man. That's the old guy over there. Call him sir.
Boom, not me.
Yeah, I started working with Bitcoin Magazine about a month or two ago, and so
Yeah.
I will be working the event. I don't know exactly what I'll be doing. CK will probably throw me over at the registration desk or something like that, but I'm sure I'll run into you guys. If not, we'll have to.
Sure. Sure, you'll be handing registrations and check-ins. Sure. Best use case for your skills, Clemente.
A quick shout out to CK, man. I don't know if he's watching this. We've had him on the show before. Hey, or the Shawarma King, Ali from the Real Tahinis. has been on our show, and he's trying to get his way out of Canada, which apparently has turned into communist Canada. But yeah, he was running late, and at the time everything was sold out. CK comes through, man. I sent him one quick DM. Hey, listen, man, our boy Ali wants to come down. Hooked up with the ticket and everything. So shout out to CK.
That's what's up.
Bitcoin Magazine, those guys are fantastic. Thanks for doing all that. Honestly,
I also, since we're at the shout outs, I just want to give a shout out to two guys here, two friends of ours. So first of all, Chairforce _ BTC. He made the logo on top of Puppy's head. Also, he's making all our thumbnails with lots of Easter eggs. The thumbnails, of course, the pics on YouTube for upcoming streams or past streams. They're hilarious. And Plan Marcus put together after my specifications the intro countdown video that I absolutely love. That to me signals FOMO and we told you so and we're right finally kind of thing. But so William, back to what I was trying to ask you about earlier. So you're saying that you may see some things differently here. What I've noticed on the Glassnode data is that there's less and less Bitcoin available on exchanges to be bought up, be it by retail, be it by corporations, be it by hedge funds. There's just less and less supply of tradable Bitcoin, which normally means price goes up. Is that any different from previously? Does that indicate this could be the super cycle, or is this just normal in this phase of the bull run?
Oh, wait, before you answer that, I just want to add on because I was thinking that same thing. And can you break down the percentage of that is from contango of people having to lock it up versus retail people getting smart and keeping their own coins? Because, yeah, obviously the drop is very precipitous. So, yeah, where did this all come from? But it is a massive drop.
Yeah, that's a really good question from both of you guys. So first, I just want to address what Pubby said. So at Bitcoin Magazine, we've actually started this. It's yet to be announced, but you guys are kind of the first to know. We're starting this new segment called Bitcoin Magazine Research. And so it's me and my buddy Dylan. I don't know if you guys know Dill, Bitcoinization on Twitter. He's 20. He's another young guy. But so we're starting Bitcoin Magazine We're starting Bitcoin Magazine Research, and one of the first thesis that we're going to do is like a very in-depth report on the coins moving off exchanges. So I can't give you an answer on that quite yet, partially because we're going to wait till we release the report, but also because I don't have a full answer yet. So but that is a really interesting question and something that I know many others are looking into, but I'm certainly looking into as well. And just in general, aside from breaking down what's causing it, it is unprecedented. If you want to, we can screen share. I can pull up a chart.
Let's go,
man.
All right, cool.
Let's go, man. We're very impressed by this whole screen sharing thing.
We can barely send emails to each other.
Here we go.
All right, here we go.
Yeah, so it's actually my pinned tweet. So here we go.
Oh, yeah, and by the way, to everyone watching, down below in the show notes on YouTube, you'll find the link to William's Twitter. And by now, it should be clear that you should have been following him for ages, but at least do it now if you don't. Also, you find links to 4 brilliant articles by William. All right, back to you, William.
Thank you. Yeah, so when we look at this chart, you see in the previous bull run, this is in 2016, 2017, we did see this little decrease in coins on exchanges, which kind of indicates accumulation. But, throughout the main bull run, you saw this huge increase. I mean, this is like way under $1,000, which happened back here. So that wasn't even before we broke all-time highs. So this is not even comparable to what we're seeing over here. Let me pull up a different chart because this will illustrate it a lot more. One sec. And so what's interesting is that, and I'll pull this chart after this one. I know we're pulling up a bunch of charts, but not only
we
are
love
we
it.
seeing the
Don't worry, man.
not only are the coins moving off exchanges, but they're moving to really long term, like strong hand holders that Glassnode uses different heuristics to kind of cluster, and they determine that they have no history of selling. But anyway, this is the one I just wanted to pull up before we get to that one I just mentioned. This is coins on Coinbase, which we all know Coinbase is the largest exchange. And so you see, throughout their history, they've continued to have more coins on exchanges. And then we saw that the peak of coins ever on exchanges was in March of last year. It's right up in this range, right up here.
Okay, wait, I'll put it back. I thought, yep. So I can't see your cursor.
Oh, okay. It's you can see the March crash, but right above that, that's the peak of coins ever on exchanges. And then you see on the right hand side, it just falls off a cliff. And then we'll do one more chart, and then I'll be done with the charts here for a little bit. Let me see. The second chart.
The one you just scrolled past was showing how the volatility, a little bit further up, the volatility, I really enjoyed that one. This one, how the volatility has clearly decreased in Bitcoin in terms of the price over the years.
Yeah, I thought this was a really interesting chart as well. I found this guy this morning on Twitter, but shout out to him. Yeah, it's a really interesting chart. You see, as we move further towards the right, the deviation between the different dots gets closer and closer together. So it's a good sign you're seeing Bitcoin lose volatility as it goes on.
I saw someone had posted, it obviously wasn't a chart like this, but it was in he had it by percentages in text from 50, 40, 30 going down year after year, the volatility going down. Damn, I wish I would have screenshot that one. But absolutely, the volatility always goes down.
Yeah.
It goes. Yeah, go ahead.
No, I'd say that then you get someone like Joe Westenthal that comes out and Dogecoin does this crazy pump and he likes to dunk on Bitcoiners. Well, no, they're intellectually disingenuous. They are absolutely just lying to themselves, and now they dug themselves a hole so deep that they refuse to climb out of. Hello, Peter Schiff, for example. I find it fascinating. What Bitcoin has destroyed their own common sense. I love it.
Absolutely.
Yeah, it's a great point, because I think there's a lot of psychology embedded into it, and I think subconsciously, at least, a lot of people feel like they've missed out on Bitcoin, and so they're trying to find a reason to justify to themselves, like, oh yeah, it's this, or it's bad for the environment. It's a good thing that I missed out and I didn't get in, and so seeing something rip in your face like that, it affects people different ways. In some ways people will want to FOMO in, and others they have this huge grudge against the asset because they're like, I missed out. It's only a bubble if you're not involved, right? That's the old saying. And so
you're 19. That's not an old saying, dude. That's the old saying, isn't it, guys?
That's what I hear from my old folks.
Yeah. You're spot on with this. And I think it's an important point, because some of the folks watching this, they're new to the Bitcoin space, man, or Bitcoin Twitter. Look, man, we've been here. We've been here and seen it before. Take your time, take a deep breath, just buy Bitcoin and hold it. You don't gotta be smart enough to read the numbers. You gotta be smart enough to buy and hold. That's it.
You don't need to know everything, right? Like the stuff I'm interested in. First of all, I don't think I'm like better than anybody else, but I'm just saying you don't need to know all this, all the data and understand everything going on. You don't need to understand everything. You just need to know enough. And for some people, that's just knowing that there's a hard supply cap and it's decentralized. And, for a lot of people like my parents, that's all they need to know. And they just need to know not to sell it, and that's it. And so there's nothing wrong with that. If that's not your cup of tea, staring at charts all day or like diving into the macro and different things people do, then that's all good. As long as you know enough to give you that conviction, that's all that you need to know.
I got to ask this question. So yeah, how do you approach your parents about this?
It
What
just
was the
comes down.
response?
Yeah, that's a good question. It really came down to the decentralization and the hard supply cap, because obviously they've lived with inflation their whole lives because inflation's been around for the last 80 years, and so when I introduced this whole concept of a money that isn't getting printed, it isn't controlled by a certain entity, it was like a light bulb moment for them, and they're like, okay, I get that. I think a lot of times Bitcoiners, and not that they have any nefarious intentions, but they tend to really overcomplicate things and throw in all this technical jargon and really kind of confuse people, right? Because we're so used to our little echo chamber where we're all talking on this like way higher level. And so when you're talking to an outsider, especially someone older like your parents, I think you really just need to get it down to the first principles, the core fundamental like pillars of what makes Bitcoin what it is. And I think at the end of the day, that comes down to decentralization and the hard supply cap.
So then did your father say, okay, smart kid, you're going to pay for your own college education with your Bitcoin?
Something like that.
I laugh because, well, hey, I don't even know if Anders knows this, man. I sent a DM to Spencer Schiff saying, Spencer, we want you on Toxic Happy Hour, baby. Coming on here and let's talk Bitcoin. I'm waiting for an answer. I think it'd be great.
Yeah, he's got a lot of followers because of his dad. I'm sure he's got his DMs are probably swarms, but he seems to have a deep understanding of Bitcoin. So hopefully he comes on because I'm sure he would be someone who has a really interesting perspective, especially given all the junk his dad's probably saying to him all day long. So
William.
Oh, sorry. Go ahead, Anders. It's your turn. You're right. My bad.
No, William. So what we really want to know is if you are attacking the dirty fiat currency, US dollars, like the rest of us, have you taken on student debt in order to buy more corn and thereby shorting the dollar and going long Bitcoin?
Mm-hmm.
Do you believe your own analysis?
Yes.
Love it. Love it.
No
brainer.
Of course. Yeah. Love it, man.
Fucking baller, man. Fucking baller already.
Baller. Yeah. Puppy, we're buying William more shots than he can handle in Miami. How about that? Because he hasn't had practice. He's been locked up for 12 months now, not being able to socialize.
Not only we're not financial advice, we're not underage drinking advice, although we've all been to university. So
wait, you have to be 21 in this country?
Jesus Christ, Anders, where have you been?
I've been in the much higher age group. That's where I've been.
Yeah, for too long. For too long. Listen, we'll get some a nice chocolate milk with a sippy cup.
All right, without any Bailey or any Kahlua in it. All right, so yeah, clearly we're not encouraging underage drinking. I don't know. In Denmark, where I grew up, there was no age limit for buying beer or a hard liquor. Like there was no age limit. You could buy whatever you want when you were 14. So this is all new to me. Okay, so it's 21 and not 18. Is that a national level or a state level?
That's federal.
Federal. All right.
Yep.
So all right, but let's get back to William. Do you have some more charts that because we're excited about this whole screen sharing concept? Do you have some more charts that will tell us about the bull run?
Yeah, I'll get back on there. One sec.
We're talking bull run charts?
Yeah. So question for you, William. I'll throw you a chart on in a sec. So granted, we don't know everything yet. We can't foretell the future, but the data you're looking at on chain does tell you a lot of things. So do you think that we could see like a 40% correction after a top, a 50% correction? I'm just asking because we got a couple of bets out there.
You mean in regards to like the cycle top?
Yeah, after the peak, whatever peak it reaches, would it be realistic to expect a 40% drawdown, a 50% drawdown? Like, what do you see?
I think I could probably, I hate to scapegoat out of this, but I could probably give you a better answer in a few months. And the reason I say that is because a lot of the institutional money that stepped in and that I'm theorizing will kind of create that price floor and won't be selling. It's still early on in analyzing their behavior. They haven't sold thus far, which I can pull up a chart after the one I just sent you that shows you these new players that have come in the last 3 to 6 months aren't selling, but still we don't know how they're going to behave when we get up towards the cycle top. But I'll be sure to let you know if I start seeing all these new holders come in that are resembling big institutional money, then I think we'll probably see some larger correction, and I'll be sure to shoot you a message if I do see that. But it'll be something we'll have a better answer on in the next couple months.
William, listen. If I was brave enough to start a podcast with a broken closet, not knowing in the future how I can afford to fix it, I think you can give us a prediction. It's okay.
Oh, yeah. Just shoot. Let's just say you just established that it's just a guess that you don't know yet, but just a guess. Just grab, go deep and take a guess.
Yeah, I would say no, because the behavior we're seeing with just based off right now, the behavior that we're seeing with these new addresses that are coming in, they're not selling, and they're showing very strong hands. If you want to, this will tie in. If you want to pull up the chart,
Yeah.
This shows just that.
Let's go.
All right, you can see.
We got it.
All right, cool. So this chart is called liquid supply change, and so what this is measuring is Glassnode has these heuristics where they can cluster different addresses based on their history of selling. So if they have a very small history of selling, like let's say I think it's under 15% of their supply that they've historically sold, then they're considered these a liquid supply addresses, and so they also need to be at least 6 months. And so if you see on the right at the very end of the arrow that I drew on the right hand side, this huge spike that we actually have seen in the last couple of days, it's two things. So first of all, it's these these strong hand buyers coming in that have no history of selling, that are adding to their addresses. So these are liquid addresses that are adding to their holdings. So this chart is saying more supply is moving to addresses that have no history of selling, to just simplify it. And so there's that aspect of it, that coins are being moved to these addresses in the last few days. In addition, it like I said, there's a 6-month threshold for this metric. So after 6 months, the address is either qualified as liquid or illiquid. And so the huge spike that we're seeing now is also addresses that bought Bitcoin 6 months ago, which is, in November, which is, we were back still way under 20,000. And so these addresses are not selling, which is very bullish, because you have these addresses that came in and took Bitcoin positions when price was around, 15, 16,000. And we are at 60 plus K. I mean, we dipped down a little bit this weekend, but they're not selling after these huge gains. And so those are the two reasons why this chart is super bullish. And that kind of backs up what I'm saying is you see this, throughout even the beginning of 2019, this consistent movement of supply to these liquid addresses. And these, like I said, these addresses have no history of selling. So this is very bullish to see supply not only move off of exchanges, but get locked up in these addresses that have no history of selling.
I smell super cycle right there.
Yeah, man. We can, if you want, we can pull up a comparison to 2017. I mean, that's one of the biggest metrics that's shouting. I hate to, throw this word out, but yeah, super cycle.
Trust me, the less that the fans got to see of Anders' face, the better. So more charts.
This is a similar chart. Just
so
goes back a little further. Yeah, man. Come on now. Here's another chart that illustrates the same thing. So realized price is the price of Bitcoin based off of when it was last moved. And so we didn't see realized price cross the 2013 all-time high until price was around the actual market price was about $3,200 when realized price crossed the previous market price top in 2013, if that makes sense. Hope I explained that well. Now the current realized price right now is 18,800 and some change. And so we still haven't crossed that all-time high from 2017 of 19,000, whatever it was, 700. And so what this is showing is that supply really isn't moving that much. And that's another indication of the same thing I was saying. And then here's a third chart. It's called dormancy. So essentially what dormancy is, you have older coins hold more dormancy. So that's like a very easy rule of thumb to think about this. So if a coin is held for 1 day, it holds 1 day of dormancy, right? And so if that coin is sold, then you have 1 day of dormancy that's causing this number, this line to go up. So as the line is going up, more it is this term in on-chain called coin days destroyed, which means if a coin is held for, like I said, 1 day, it has 1 coin day. If a coin is sitting in an address for 10 days, it has 10 coin days. And the second those are sold, there's more coin days being destroyed. And so this is basically running a moving average over that to give you a better macro smoothed out picture of that phenomena. And so you see at the market, at the cycle tops, you have these huge spikes in dormancy. And that basically means that long-term holders, older coins, are being sold off. And we still haven't seen a significant increase in dormancy yet. We still have a lot of room to go in terms of the behavior of these long-term holders.
This is fascinating, Pubby. What the on-chain numbers indicate, huh?
Well, it's funny. It's sort of, when you think about it, I love the fact that there's some people that come in that just realize buy and hold. Now you see the surgeon or the doctor behind why you're healthy, why you're doing well. You get the guy behind the scenes that tell you, oh yeah, because you've been eating, either carnivore diet, vegetables, drinking water. So it's cool to see. Like most people will take things on faith, take it on faith, just believe and go, and they're doing quite well. So to see the nuts and bolts behind it, yeah, it's like living through not a live surgery, but you're watching it real time with numbers. It's crazy.
Exactly. Yeah, and it's like you said, all the Bitcoin holders know intuitively that this is all happening. They may not have special metrics and special, different indicators that they're looking at to like describe this through math or ratios and things like that, but they know that this is happening. And they may not be able to, articulate it in terms of, like you said, exactly the nuts and bolts, but they intuitively understand that these things happen and these cycles exist. But yeah, it's fascinating to look at the different, actual metrics and understand, like you said, the framework of what's actually going on and seeing what's making the cycle tick.
And this, it's interesting. This may not turn everyone into a Bitcoiner, obviously, in the world or the US where I am. But I'll tell you what, man, this pandemic and Bitcoin and cryptocurrencies has opened their eyes into what the term fiat currency means. They're understanding, well, wait, what is backing the dollar? Why are prices going up? There are more people questioning the system now than ever before. Before.
Yeah, that's a really good point, and the on-chain data shows that as well. I think when you look at the the rate of coins that were moved off exchanges, I don't think it's any kind of coincidence that that right after we saw the Corona crash and the huge liquidity crisis, that coins began to just be dramatically ripped off exchanges. I don't think that's a coincidence by any means.
I didn't know that, but that's a great point. I never thought of that. When did it start? When did the coins start being ripped off exchanges?
And this is interesting. The peak of coins on exchanges, the highest balance of coins that were ever on exchanges, was the day of the Corona crash.
That was the peak all time of Bitcoin available on exchanges. And since then, companies like MicroStrategy that understand that basically the dollar is dead long term, start exchanging their dirty, diluting, collapsing fiat currency with true sound money of Bitcoin, born for the world of the internet and online. Man, this is beautiful. I think what's really interesting here as well, Puppy and William as well, is that we have an intuition looking at older bull runs that, yeah, for sure we're going to go to 300,000 minimum, but here we have on-chain indicators saying, yeah, absolutely, that 300,000 is pretty much locked in. Of course, there's never any guarantees, and this is not financial advice. We're just looking at it, and this is our personal opinion. But that 400% increase from here is pretty much a no-brainer. And William threw out that 700,000 early on, Puppy. That's 1,000% this year.
Well, look, it's hard to explain, because it takes everyone that comes into Bitcoin. There's a period, and it's not unlike the Matrix, where you've got to get your head around numbers. You got to get your head around what is $1 million, what is $1, what is value. It is a hard thing to wrap your head around. Okay, so when you tell people, yeah, 300,000 or 500,000, they don't realize that you're talking about value as well. You're talking about the price is coming down. Well, that's impossible if you have Bitcoin. What happens to inflation? Well, there's no inflation. Guess what? Everything comes down in value. So that is the most difficult thing. It took me some time to understand, obviously, but man, once you get it, you get it.
Yeah. I will say, as expected, this toxic happy hour leaves me minimum as bullish as I was before. Absolutely loving it. William, let's.
Do you mind if I just tag in real quick before you make another point? I was just going to say, when you're talking about valuing Bitcoin, right, and we're talking about dollar terms, eventually you're going to get to the point where you can't value it in dollars anymore. You're going to have to value it in different things. And there's that whole meme where you're talking about 21 million, infinity divided by 21 million. It's true, because at some point the dollar denomination is not going to really mean anything. And this is a very interesting fact that I like to use. Let me just put this up real quick. If you divide the amount of land in the world by 21 million, right?
Puppy loves this one. He keeps.
Puppy did a land acres to Bitcoin a couple of years ago. But I love it. Let's see it, man, because it's just absolutely brilliant.
Did you break up some?
Good. No, I didn't have anything to. I'll show you. Just leave it up though, because I got something else to pull up after this.
But when I see you change it, I'll throw it up. Whenever you throw something new up, go ahead.
No. Here's what I would say. Here's what the most fascinating thing about Bitcoin is, unlike Manhattan, you can't build up.
Yeah.
You've got land, but you can't build up. You get the acres. That's it.
If you divide all the land in the world by 21 million, including inhabitable land, you get about 5,800 acres per Bitcoin. And so you're not obviously each acre is worth a different amount because you're talking about in the Sahara Desert or in the middle of the ocean versus Manhattan or Tokyo or something. But what this illustrates, though, is you can think about it of the size of the network that you hold. When you're thinking about the mass of the network, right, of this global network, when you're owning one Bitcoin, you're owning that amount of mass of the network. It's not necessarily translating in terms of value. But yeah, it's when you're comparing the amount of the network, you're staking your claim on the network. That's how much mass of the network that you're owning by owning one Bitcoin.
You know what's cool about this, Anders? For you and I to go out to our friends, dear God, man, it's a hero's journey just to get them to understand Bitcoin a bit. I know William can go out and look, he'll convert 100 people at this age. 100 people that will finally get it. So the future, I think, looks bright for Bitcoin. Just
Pubby,
on that.
and one thing, for my age, it's a lot easier for us to wrap our heads around it. Like all respect to the older generation, but
yeah,
we've grown up with technology, dude. Like I've had a little device in my hand since I was in like first or second grade. So the whole concept of digital money and digital scarcity is not crazy to us, and having this internet native money.
You son of a bitch. I grew up with Atari and television and Nintendo. So I'm the first generation.
Nintendo 64?
Oh, listen, I had what was before that? Man, Commodore 64. Do you know what the Commodore? Do you know what the Commodore 64 was?
No.
Because you're a young kid. Let me tell you, it's one of the first computers. The 64 represented 64K of RAM. That's the 64.
Dude, wow. So William, let me tell you, the Commodore 64 was not only a beautifully designed computer, but it was also the premier gaming computer in the 80s. I think a lot of people will attest to, although some people will claim that Atari 500 was better, but these are all names way before you grew up with a supercomputer in your hand. Like you said, we're growing up with digital devices. Pubby and I didn't grow up with digital devices in our hand.
Yeah, I'm seeing this comment here. It says, "We had tech, kid, LOL." I'm not saying you guys didn't. I'm just saying you guys didn't have a device in your hand that was connecting you to everybody else that instantly, being able to send them pictures.
Absolutely not. Absolutely not. Oh, William, don't. The chat is very sarcastic and dark humor. Don't be offended by the chat.
Oh no, I've been loving the stuff I've been seeing in the chat, man. They're hilarious.
Awesome. If you see any questions there that you want to take on, please go ahead. But William, so one thing I've been thinking about a lot going into this Toxic Happy Hour with you coming on, who was William Clement the first? Who was the second? And what's the whole deal about first, second, and third? This is that's interesting to me. What's going on with that?
Yeah, sure. So my grandfather, he had an auto parts store in New York that he inherited from his dad. He served in the military. He was just, very blue collar guy from Bronx, New York. And then my dad, he kind of was the one that shifted towards this whole kind of more corporate style living. He went to Villanova University. He works at Lenovo, the computer company. And so he's always kind of given me an interest in business, in addition to the kind of entrepreneurial spirit that I had from my grandfather. But they moved down from New York. You see the Brooklyn Bridge up here. That's a big influence on me because all my family's from New York. But I wasn't born in New York. I was born here. But my dad, he moved down from New York to take a position at IBM here in North Carolina, and then he ended up switching over to Lenovo. But that's always been a big influence on me in terms of business because I've always kind of grown up around, him on conference calls and all these kinds of things, and him always on the phone with people. So like just hearing different buzzwords and stuff when I was younger always kind of instilled this like interest in business in me.
So what do you think your well, I know you talked to your father, but grandfather, great-grandfather, the concept of Bitcoin to them, would that have been just totally alien or something that they would have said, fuck yeah? I get it.
Yeah, my grandfather isn't like super with it, but I think back in the day he would have for sure got it because,
Yeah.
like I said, he served the country, and I think Bitcoin is one of the most American things that there is. The foundational truths of what makes the United States what the United States is and gives it a competitive advantage against other countries. That's literally all of those principles, and then some are instilled into Bitcoin.
Love it. And I agree. So Bitcoin is so true to the spirit and the ideology of the founding fathers of this once great nation. It has just since been corrupted by evil central banking and private bankers owning the central bank and politicians being paid to create increased military spending, et cetera, et cetera. Not that I have proofs on that, but it's pretty obvious the way that politics are run. I want to take a moment to Pubby introduce William to a tradition we have here, which is the scarf pump. And I want to let me just share screen and show how the price of Bitcoin never fails to pump when Pubby and I and potential guests are wearing the scarf as we're doing the show. So this is a 15-minute chart of the price of Bitcoin. And if you go down to where it's supposed to say 9, let me see if I can you guys see my cursor? So around here, we initiated the Toxic Happy Hour William Clement III edition. And since then, we've just been going up. The problem we have, William, is that once we end the Toxic Happy Hour, we are not carrying the price anymore, and the sell-off comes. But one of the best technical indicators in Bitcoin history, I think, is you got to buy Bitcoin when Toxic Happy Hour goes live. It's a sure bet.
I got to tell Glassnode they got to get that in there.
If you go back over our history, and Anders is not lying, yes, if you go back on the history of the shows, I think you're up a few thousand% right now.
Wow.
So I got a question for you. Hey, so here's a question for you, man. And I'm sure you get it all the time now. College buddies come by. Dude, Dogecoin, looking good. Look at this shit. Why shouldn't I buy this? How do you answer him?
Yeah. So first of all, I think the whole Dogecoin thing is, if you've read the book When Money Dies, a lot of the stuff that you see in that is kind of replicated by what you're seeing now, where people are basically just gambling. At the end of the day, Dogecoin is just a gamble that people are making, and I think it kind of represents this more deeper ideological phenomenon that we're seeing in society, where people that are buying Dogecoin are saying, fuck it, my life sucks, I'm just going to YOLO all my money into Dogecoin and see what happens, right? Versus Bitcoiners are saying, I want to build a future for myself, build this solid foundation for myself into the future. This is something that I know is definite, and it's something that I can build a life off of, right? And so that makes you more optimistic about the future. We can get into all this, but it makes you optimistic about the future. It makes you want to take care of yourself, your body, so you can appreciate the spending power that you're going to gain from that. American Hodl calls it nihilism. Exactly. Yep. So that's the way I kind of view it. And so when I talk to them, obviously I explain it to a scam, but I almost kind of feel bad when people have that frame of thinking, because it does make me think that, as American Hot would say, the whole nihilism thing, it just shows that that's even more true every time I hear more people coming to me talking about Dogecoin. I feel kind of mixed about it, because you have these big influence people, that are saying buy Dogecoin, or Reddit saying buy Dogecoin, and people that are unsophisticated are just going to take this at surface value and just, do what they're told and just be like, oh, okay, this thing's going up, I'll just buy it, right? And they don't do any kind of due diligence. So first of all, that's misleading to those unsophisticated investors. But on the flip side, I think it's a good thing, because I think of Bitcoin as monetary Darwinism, in the sense that if you don't do the due diligence and don't understand what sound money is, and all Bitcoiners understand this, you don't understand what sound money is, why it's important, right? And how, all these network effects work that are, solidifying Bitcoin as the clear winner here, then you don't deserve to gain the spending power that Bitcoiners do throughout what's getting ready to happen, because you don't have those critical thinking and independent thinking skills that Bitcoiners do have. Bitcoiners have done the homework. Bitcoiners have done hours and hours and hours of research, podcast listening, toxic happy hour listening to all these different guests, right? And so they really understand what they're holding, versus Dogecoin holders are just saying, oh, this thing's going up, so I'm just going to buy it, right? This is why Bitcoiners are able to hold when price goes down, because they have conviction. I guarantee you, if you didn't understand what Bitcoin was, and you didn't have all these hours of research that you've put into it, you wouldn't want to. You would be scared to hold when it goes down 30%. But we all understand that that's just part of the journey, right? And so we embrace the dips. We're like, this is nothing, hodl, and everybody, when we go down, you see on Bitcoin Twitter, there's some people, that the newbies, that freak out and sell, and then other people are just like, you see all the memes, people are basically making fun of the drop, because they know where this is going in the long run, and they're not worried about some little correction, because they have that deep understanding, which is great, because when we get to the other side of this thing, there's the old saying, and it's not necessarily about control, but the people who have the money have the power, right? And at least have the spending power to allocate capital into the future to build like a better future, right? And so the people that don't own Bitcoin and aren't early adopters in Bitcoin, aka haven't done their due diligence and their homework like Bitcoiners have, are not going to be beneficiaries on the other side of this, which is awesome, because all these people, all these fiat people that we always talk about, all these sheep, just listening to whatever they're told, they're not going to be the ones that have power and spending power on the other end of this. It's going to be the people that have critical thinking skills and are able to step out of the box with this contrarian view and say, hold on, I'm not going to listen to what the Federal Reserve is saying just because there's some authority. I'm going to think for myself. I'm going to say, how do I break this down from first principles, understand what sound money is, why it's important, and then therefore what fits that definition. What is the soundest money, which is Bitcoin. So I see it. I feel kind of mixed about it, because I see some of my buddies, that are falling down these traps, these Dogecoin, Ethereum, all these other, shitcoin traps, right? But at the same time, there's the party that's saying this is a net positive for society as a whole, because we're going to have, like I said, all these people that are critical thinkers that are gonna be the real beneficiaries on the other end of this.
Puppy, I'm putting in like a
you want me to go?
An audio break, so to give you a chance, I don't want to.
I was doing the same thing for you, man. I was just giving you. No, it's absolutely true, man, and that's the hard part. Imagine at this age, Anders, that you recognize the difference between the scam called fiat currency. When you wake up one day and you find out that the wars that, because listen, I've got the same relatives, the wars you have fought for the last 100 years and relatives believed in and died for. Imagine you wake up one day and you realize it was financed by the shit currency, by a shit government that didn't even care about you. Okay? You wake up one day, once you realize it, man, I fucking love Bitcoiners, because Bitcoiners get it, man. They get it. They see it for what it is. And once that veil is lifted, you can't unsee it.
And you make a great point, because the reason that there is upside is that there are other people that don't believe that. If everybody in the world believed what we believe, there would be no upside in Bitcoin. So it's kind of a good thing in that way, that it's this filter, right? I like to think of it as a filter, and it's sifting out all the bullshit, people that aren't doing their due diligence, that aren't able to think for themselves. And the only people that are getting through the filter are people like us, or the people in the chat, all these people that really break things down and are able to think for themselves. And what you also touched on about the whole war thing, I think is very important, that when we get to the other side of this, the state isn't going to have control of the money, which is awesome. But one of the main reasons that it's so awesome is because they can't just finance wars with inflation, right? They have to go to the people that have the money. Like if you go back to the 1500s, the people who had the gold were the ones that governments like, I don't know, Spain or England back in the day, they had to go to the people who had the gold. They couldn't just decide they want to go to the war. So what that means is that in the future, when Bitcoiners have the money, people are going to have to go, these governments, if they want to finance a war, they're going to have to go to the Bitcoiners, and they're going to have to say, hey, look, this is why I want to start a war. Do you deem this a good enough reason for us to go to war? And Bitcoiners, knowing how we are and the ethics that Bitcoiners have, they're going to say, hell no, if it's some terrible reason. No, you're not going to just start a war for oil, right? We're going to be the ones that are dictating these decisions, and especially in that regard, when we're talking about military conflict and war, they're going to have to come to us because we're going to be the ones with the money.
You know what the sad part is? They're going to charge you, I don't know, $2,000 to go to a course that you can find free online. A shout out to sailor.org for doing this, because they'll give free fucking education out there. But let me tell you something. What most people don't realize, the Louisiana Purchase, half of the United States was purchased because France had to pay off debt. And how do you pay it off? You sell land. Half of America was paid off because of gold. That's the only, they needed money. France needed money. We sold it to them at the time. It's absolutely insane. Go ahead, Anders.
No, I'm huddling my voice because I really enjoy William sharing his thoughts. But let's go quickly back to circle back to Miami, which is going to be I think a wonderful event, and the first time that Pubby and I get to meet each other. So you're going to be doing some work for Bitcoin Magazine down there. Are you speaking as well, or because I think that would be obvious?
Yeah, so like I said, Dylan and I are starting Bitcoin Magazine research, and so there's two main days for the Bitcoin conference, and then the night before, the night of the 3rd, they're doing something called Whale Night, which is basically where all these big shot people can get together and network and feel important.
No. What that is fat guys like me and Anders come in. We're just fat.
No, because we don't got $2,000 for that, puppy. We ain't going to Well Night.
I lost mine in a boating accident.
We had some guy yesterday who dropped 60 grand on these whale tickets. Like, these people are just,
whoa.
Yeah, but so we're going to be announcing. Yeah, no kidding. So we're going to be announcing this Bitcoin Magazine research. I'm not sure if I'm supposed to be saying this or not, but whatever. We're going to be announcing this on the Whale Night. So I will be speaking then, and then we'll probably have like a little booth for that as well that night. But in regards to the other 2 days, I don't know. I'll probably just be bouncing around.
No, we'll meet up there.
What days are you guys coming? Are you guys getting there a couple days early or what?
No, I'll be there the day before, I think. On the 3rd. Yeah, 3rd I'll be there. 4th, 5th.
Speaking of,
no, hey, looking for. Hey, you know, one of our favorite, Jet Booth. I got to meet up with him for a beer. Other than that, him and Preston, and honestly, man, you'll be there, I'm sure. We'll get you into the bar, man. We'll get you in. Don't worry.
Sneak me in.
Now, like we can't go on the record talking about federal offenses here. But it sounds like a great idea, though. But, you know, we would never do that, of course. But, yeah, William, I'll be there the 3rd. I'm coming in the 3rd in the morning. I'll go check in at the hotel. And then I'm leaving Monday the 7th, I believe it is. Okay. So I have also the Sunday to recover and hang out with, you know, new friends you meet at the conference. Puppy, how long are you? Are you going back the 6th or the 7th?
It's right now I'm back on the 6th. I got another life until Bitcoin hits, I don't know, 1 million as predicted today.
It
Then
might
I'm
be. I
good.
don't know, man. It might be the 200K party here.
Oh, we
We
want to
love the
hear
spoon
more
juice.
about that. So,
We love the
William,
moon juice.
potential 200K, because I've been saying like surely we'd hit 100K before the June 4-5 conference, but you throw 200K out there, and you know on-chain better than us. What makes you like? What kind of builds that thesis that you see on-chain?
There's no substance to that. That's just from Matt Odell. Matt Odell, he keeps coming out saying that it's going to be the 200K party, but yeah, don't take that serious.
Okay.
No, I do have a question though. I mean, how do you evaluate it? What's the best way to evaluate Bitcoin moving forward? That's the hardest part of it all, in a way.
You mean in terms of like how to predict where the price is going?
Yeah, from not
Long
only
term.
from not only fiat, but we talk about a speculative attack, because you can't sort of figure out how many people are going to be able to generate a 0.5 basis point loan like Michael Saylor, and then 0 point loan, or as Preston Pish recommended, you can get a negative loan moving forward. How in the hell do we evaluate this moving forward? I I just tell my friends, just buy it and hold it. That's it.
Yeah.
Buy it, hold it.
Yeah, I think at the end of the day, I think the driving factor that's going to be kind of the inflection point, and this is a very simple answer, but just the loss and trust of the dollar. I think when the consensus, I think it's very easy for Bitcoiners to get caught up in our little echo chamber, right? Which we all know what's going down. Like we all understand this very deeply, right? But when you go out and talk to somebody on the street, they have no idea any of the stuff we're talking about. So when that becomes more apparent, we're starting to see actual inflation in things like lumber, which has gone like parabolic over the last 2 months. We saw Preston retweeted something today about Coca-Cola having to raise their prices because commodity costs are going up, and then just generally looking at the stock market. And it's interesting thing is you're seeing you see the money supply go up while the velocity of money goes down, which for anybody who doesn't know is just how often money is changing hands. And at the same time, you see asset prices going up. Put those three things together, it's not really hard to see what's going on. Money's going into the people up here at the top, going into their hands. They have enough stuff, so they just throw it into assets, and it just inflates assets more. So it's interesting that you're now seeing starting to see inflation in like more everyday kind of goods, right? And so I think when the consensus of people start to recognize that, that's when it's going to really be a huge inflection point. I think another inflection point is when you have a major country come out and say, yeah, we're throwing this thing on our balance sheet. I think that's going to be a huge turning point just in terms of the game theory. Because that's going to get everybody else looking around and saying, hold on a second, like I need to, like, okay, you mind if I pull up a chart? Because this kind of, all right,
go.
Cool.
Let's go.
This is a similar concept in that it was after Tesla bought, you saw a complete change in sentiment in the market.
I was hoping this was, you remember The Social Network, Anders? Remember that movie?
This is the same chart as The Social Network. That was a lot of fun.
I'm hoping this one. I hope this is one where he's rating all the girls in his sorority next to him. I don't know.
So you see here, so this goes back to dormancy, which was what we talked about, older coins being sold. And so I scroll down, so you should be able to see the time frame. You can see the old coins were consistently being sold all the way up until at the end of January, early February. And that is very interesting because it coincides right around when Tesla announced their buying. And right after Tesla announced their buying, you just saw a complete change in the behavior of these long-term holders. So like this is just like a very micro example of when you have these big events, it's like Preston said, it was the shot heard around the world. Like it completely changes everything. You know, like Michael said, like to talk about all your models are destroyed. If you had some central bank come out tomorrow and say that they're announcing some position, it's going to change. It's going to change everything about the behavior of all different central banks around the world, because all of a sudden they have to take this thing serious as a Federal Reserve asset. And I think they already are, because you heard Preston bring up the other day. Let me see if I can find this quote. Jerome Powell had said that that he doesn't see Bitcoin as a threat to the dollar. My bad. I'm trying to pull up this quote. And so
That's funny.
but what the funny thing is, so here's this quote: "Never believe anything until it is officially denied," by Otto von Bismarck. And so if you apply that, it's very interesting, because if they didn't think it was a real threat, they wouldn't say anything about it, right? They would just be like, oh, yeah, I'm not even taking that serious. I'm not even going to mention that. But the fact that he came out and said that shows that they are thinking that, and that they're just trying to tone it down and act like it's no big deal. But the people at the Federal Reserve aren't stupid. Like, we like to give all these people a hard time. You know, at the end of the day, they're looking out for their own self-interest, in the sense that they're not trying to be the one caught holding the hot potato, right? They're trying to throw it to the next guy and not be the one that's bearing the baton when everything collapses and goes to shit. So I think, but at the same time, they aren't stupid, right? And they understand network effects and all these things. They know Bitcoin is a problem, but they just can't say anything about that publicly.
So they're not stupid, but here's the problem: they're not stupid. They're handcuffed.
Mm-hmm.
They're not stupid.
Exactly.
Their hands are cuffed right now, so they have no way out. They've got no way out of this situation, so they're not stupid. And you know what's great? I love that meme of there's a monkey sitting back watching someone else that's stupid and eating a banana. Fuck you, Mark Cuban, by the way. But let me tell you, enjoy your bananas. But I will say this: you know what's brilliant about it? Right now, Bitcoiners sit back and watch them handcuffed, going to zero. They got nothing to do. They got nothing they can do.
It's a beautiful thing, man.
I know, man.
William, when do you think we'll see the next expansion of MicroStrategy's attack on the dollar that they're already doing by taking on fiat debt, dollar debt, and going long Bitcoin? Do you have any insights to that? Like, when could we see MicroStrategy? When has the price gone up enough? I know this is a question maybe more for Andy Edstrom, but I'm interested in hearing your take on this, and when do we see maybe other companies going long Bitcoin? What are your expectations?
Yeah, so again, I'm going to cop out a little bit here, because I don't like to make. I'll give you my thoughts after I do my whole spiel, but I don't like to make predictions. I like to just evaluate things as they're coming. And so what I will say is that it would make sense for him to do it tomorrow or next week. I have no idea. And I don't think that it's done. I think he'll announce another round of notes soon, probably at a negative rate. I think what's going to really be interesting, though, MicroStrategy is great, but when do we see a big, at the end of the day, MicroStrategy, we love MicroStrategy. Go MicroStrategy. They're, huge proponents of Bitcoin, but they're not that big of a company in the grand scheme of things. And so what for the broader market, for them to wake up, it's going to be when you see Amazon, Google, Apple, Facebook, one of these huge companies that come out and announce one of these kinds of issuances, then people are going to say, "Holy cow!"
Yeah,
that's going to be a huge red alert for people. Like, I need to figure out what the hell is going on here.
I couldn't agree more. And Apple have around $200 billion on their balance sheet, so that's 400 times more than MicroStrategy had 1 year ago. 400 times more. If I would say if Apple does some MicroStrategy and say, okay, we're going to convert everything to Bitcoin, because obviously it can store the value better, and then later starts taking on convertible bonds, that itself will bring price to $500,000 overnight.
Dude, if I did the math, if Apple takes 5% of their money and puts it into Bitcoin, it's going to eat the entire Coinbase order book from here to 100K over 15 times over. That's 5% of their money.
You heard it here first on Toxic Happy Hour.
It's so early. Like, we talk about how early we are. It is so early. It's insane. Like, the liquidity that we have, if Apple decides to take 5% of their money, or even 1% for that matter, price is going to teleport. Like, we do not have at this point. And this is something I think a lot of people don't realize. You know, we're playing around, or at least, you know, me, with a couple $100. I think a lot of plebs are, you know, they DCA a couple $100 every couple days, whatever.
Sure. Couple $100.
What big money is waiting for is for price to rise. Like, we're waiting for a dip so we can get our DCA
point
average down. They're waiting for the price to go up. They want price to reach a high enough market cap that it gets de-risked to the point that it's okay for them, and there's enough liquidity for them to come in and take a position like that.
This is how fucked up the current system. They're waiting for prices to rise and spike so they can buy in at the highs. That's how stupid things are right now. Because we buy in, great, fantastic. It's unbelievable to me. This is our modern system. I don't get it.
I think it's this interesting. I'm trying to think of a way to visualize this. Like, if you have, it's just this threshold where Bitcoin liquidity and the market cap gets to a size where all these huge players can come in, and they have it's like they're hanging off a cliff with their hands down, reaching out like, come on up, come on, you're so close. When it finally gets up to that point, you're just going to see a flood of money come in, because the second that they can come in and step in and not move the price significantly, like when Apple can come in and move around a couple % of their money into Bitcoin without, you know, causing the price to go up 5-10%, then that's the time that you're going to see them step in, right? And not to mention the game theory of, if Apple steps in, then, you know, other players are going to be like, holy shit, I need to step in too. But just from the standpoint of, there's probably a lot of companies that are out there saying Bitcoin is awesome. Like, I think this is how historically it's been. Bitcoin was at you know, less than $50 billion market cap. People are like, I love Bitcoin. Bitcoin's a great concept. I love what Bitcoin stands for, but it's just too small. You know, I'm a hedge fund managing $10 billion. I can't take a position in this thing. So when it gets to a certain size that these players can step in, I think that's going to be the moment that you see price really just kind of teleport up.
Yeah, couldn't agree more. It's Greg Foss, when he was on the show for probably about a month ago or something, the reason he now has the name, he was dubbed by our chat, Gap Daddy Foss, is because he spoke about the overnight gap. You wake up the next morning and Bitcoin is up a couple $100,000 because,
and that's the risk of not owning it. The risk of owning Bitcoin is not having too much and the price draws down. The risk of having zero Bitcoin is price going up 2-3x in a matter of a couple days. The risk of some fund coming out and saying, we've decided to allocate 10% of our federal treasury to Bitcoin, and then everyone, you know, the FOMO really kicks in and you just see price teleport up. That's the risk of not owning it. I think, you know, the risk of being on zero and having no Bitcoin at all is incredibly greater than having 99% of your wealth in Bitcoin.
I like that. And I agree. Imagine if you don't have any Bitcoin, you have decided to be short the best performing asset over 12 years ever in human history. Let's remember that people talking about bubbles lasted 1-2 years or something. This is 12 years. This is not a bubble. This is 12 years of outstanding performance. if you're short this, you're doing your the future generations a dishonor.
Danish, if you don't own Bitcoin, you're short Bitcoin, right? And so in that sense, hyper Bitcoinization will be the greatest short squeeze in the history of mankind because the majority of the world is short Bitcoin right now.
We're talking 99.8% short. I don't care what people tell you. I finally had someone today at work tell me, "Guy, you were right." I heard from a friend of mine. Bitcoin may be the future. I should have listened to you. And God bless him. He told me, he goes, "Well, I'm on Robinhood. I bought some Bitcoin on Robinhood." No, what? Look, man. At least the guy's starting to understand it a bit.
Exactly. Yeah, and that's a good point because like a lot of people give PayPal and Robinhood a hard time that you can't withdraw Bitcoin, but at least they're getting these people on the lifeboat.
They are, man, and he's legitimately concerned about it. He goes, "I understand, so I'm buying. I'm on Robinhood." So I'm like, "All right, take a deep breath, dude, because I'm gonna blow your mind about how you should buy it, how you got to self-store it." So I gotta walk him down. I'm glad he jumped into the water, but I gotta throw him a little bit of a life preserver.
Poppy, I'm just going to throw this out there. I am really loving this conversation with William, and I would love if we could do, even if you only have a little bit of time, William, if we could do like a monthly rundown on where are we on the blockchain now? What are the indicators telling? Could we do like, whatever little time you have, do like a monthly Toxic Happy Hour on understanding the on-chain indicators and help us guide through this insane bull run?
Let's do it.
That'd be awesome. It's done. It's done.
Oh, it's good. Yeah. Oh, yeah. Because we're over to, I got to start winding down myself here on the podcast. William, man, thank you for coming on.
No problem, guys. This was super, super fun. It's a highlight of I was looking forward to this all day and did not short my expectations. So thank you. Thanks a lot for having me on, guys.
Let's, 2 hours seems like 5 minutes when you love Bitcoin and you talk
no
Bitcoin.
kidding.
That's true, man.
So on the same note, William, really appreciate you coming on. I really enjoyed all your insights. It's great to see someone, that's what Bitcoin is about, meritocracy. It doesn't matter. You don't need to be 50 years old or 60 years old to be respected. If you have the good insights and great, logical thinking like yourself as 19-year-old, you have exploded on Bitcoin Twitter. You have exploded in following of your analysis, and I just love to it's so many years ago, I was that age, but Poppy, if you and I had like somewhere near what William's got going on, we could have gone places. You and I, we could have gone places. William is going places. William, thank you so much. Really appreciate it. I'm looking forward to. I'm glad that we managed to nail that, like a monthly, whatever time you have, we're gonna have you on and share your insights. And thank you so much.
Well, even better, not only have him on, but if we get Greg Foss or Preston Fish back, jump on in with us, man.
Yeah, I'd love to get on with Preston, man. That'd be awesome.
Yeah.
I just want to say shout out to the chat as well. You guys have had me dying laughing half the time. So this is the most entertaining chat that I've seen since I've done any of these podcasts here the last couple months. So.
Yeah, Peter McCormick sucks.
What?
Love you, Peter. Yeah, I love Peter. I love Peter, man. I just joke with those guys. Yeah, those guys are fantastic. So
yeah. So
thanks. I'm super. I would love to come on because I think this is very interesting stuff. Not everybody kind of has the time to just sit through and look at charts all day. But like you said, it is important, and it is interesting to kind of see like the nuts and bolts about how all this stuff is going down. A lot of times up until the end, you just get more and more bullish looking at all these coins getting locked up and all these on-chain things that you're seeing.
Oh, I love getting locked up, baby. Forever, Laura. Forever.
Forever, yeah. At the rate that the stuff I'm seeing, we're going up forever. So
can we get some chat saying free William? We can't end the show without some free William hashtags in the chat. As Plan Marcus said, he knows that 15 minutes. This is when we say we're gonna end. That's like all right, there we go. Free Willy. from Plan Marcus, also the founder of the Red Balloon in the chat. All right, thank you so much. So once again, we've got William in the show notes down below, his Twitter handle. You are insane if you don't follow William on Twitter. Get on Bitcoin Twitter if you're not there already. There's so much intense knowledge being shared for free on a daily basis. And also 4 great articles that William wrote. Yes, he wrote 4 great articles. They're down below. At the same time as he's going through college. Production is next level. So go down in show notes and check that out. Thank you so much for being on, William. I want to give you some final words, anything you want to plug, anything you want to share until next time. Please go ahead and take the word.
Sure. So, I just wanted to say I hope I see everybody listening at the Bitcoin 21 conference. If you haven't got your tickets already, which I'm sure a lot of you guys have, the prices keep going up. They keep upping the prices because they keep selling out. So they're just at this point just raising the prices in comparison to how fast the tickets are selling. So, it's like Bitcoin price, supply is going down, prices going up. So get your tickets. And I'm sure there'll be a lot of stuff going on there, not only at the event, but, events outside of the actual conference as well, which is what a lot of people are going for. So it'd be great to see other Bitcoiners, and it should be an awesome time. We're very early in the cycle. Don't let the stuff that we're seeing in these short-term corrections and these huge down draws get you nervous or make you rocky. Nothing that we're seeing on chain is indicating any kind of big macro down draw. We still have a long way to go, guys. So I hope I can come on again soon, like you said. Shoot me your email or your phone number in the Twitter DM when we get off of here, and I'm happy to make it happen, man. Thank you guys so much.
Awesome. And I just want to add to that before I want to give the word to Pubby. Obviously, he's got to have his final words as well. But I want to add to what you just said about buying the ticket. In general, in life, it pays to be an early mover, and that relates to Bitcoin as well. It also relates to the Bitcoin Magazine conference, Bitcoin 2021. And I want to share with you that I bought this ticket for $1 because I was early. It's the same thing with Bitcoin. Do not wait the last minute. I have a return on, I think, like 350x on that ticket. I think it goes for what, $350 or something now?
Yeah, CK would be happy to see that, man.
Yeah, no, I bought the first 24 hours when it came out, and I was supposed to go to San Francisco last year on that ticket. That was changed to Los Angeles. But thanks to the way the states differently treat COVID, that has now changed to Miami, and I can't wait to go. Poppy, final words from you, dude. This is has been an amazing Toxic Happy Hour.
Yeah, hey man, I live in Florida. We're the best state aside from Texas and Florida. We are the freedom states right now in the world. So come and join us. Just do not bring your voting rights with you. I will say this. No, we'll say that, man. To think back at that age, man, to be 19 and smart on anything, you got such a brilliant future in front of you, man. It took me, man, an extra 20 years to even understand what the hell you're talking about. No, man, you got it. So, no, thanks for joining us. And I'll tell you what, man. Yeah, I think your idea of a recurring thing, because, man, this next year or two will be fantastic. It'll be the way it's going to change, the way people are going to view Bitcoin. It's going to change so quickly. Yeah, I like someone that can actually get behind the numbers.
Pubby, I'm sorry to cut you off, but I think all the stuff that I'm seeing, I think a lot of these indicators, they're all going to get invalidated at some point. It may be this cycle, right? And so, yeah, I think you're completely right that the data might follow what you're saying.
Hey, forever, Laura. Forever.
All right.
Thanks, guys.
Love it.
All right.
Cheers, guys.
It's been amazing. And yeah, it's been amazing. Thank you so much again to William, to the chat, the viewers. It's been awesome. Puppy, obviously, my great.
I'll have a scarf next time, by the way.
Thank you.
Excellent. So let's do a quick check on, actually, now that you mention it, let's do it before we log out, because for us it takes a long time to finished. Let's just check on the scarf punt. It's saying unable to share screen. All right, so I can't share screen right now for some reason, despite having the Pro updated version of Restream. But I can tell you that we are, when we started, we were around just below $56,000 per Bitcoin. We are $500 higher now. Once again, the yeah, no, we don't want to see that. That's a 1 minute chart. It looks that right or what? What do we got?
No, it's a daily chart.
Oh, it's a daily chart.
Yeah,
yeah,
it seems like the pump got us right back up in this little channel here. So
give us the. Can you do 15 minutes chart?
Yeah. I'll do 15 minutes. 1 second.
Yeah, Andrew's translation. Can you do the chart that puts us in the green?
Yeah, of course. We gotta support. We gotta manipulate data to show that the scarf pump, the toxic happy hour scarf pump, is real. Once again, you should have been long. You should have been long. You should have been long, and you should still be long. So awesome. Thank you very much, William. But we do respect your time. So I want to do the outro now, and I just want to tell people it should be obvious.
I could have gone for another hour, guys.
Yeah. So, but we're gonna do that on a monthly basis from now on going on. Pubby, that was probably apart from a great episode, one of the best things come out of this. We got William locked down on a monthly basis. This is going to be awesome. We're going to watch the bull run unfold. We're gonna watch if we're gonna stop or return at 300, 400, 500, 700, or $800,000 per Bitcoin by the end of the year. Okay, Pubby, you want to say something before the outro? Go ahead.
No, William should sign off here, man, because I could talk forever. But it's so cool, man, just to see the next generation coming in on this. Man, it's so brilliant. Hey, man, take it away from here. I'll tell you what. I know my future is secured because of Bitcoin. Now you talk to the rest of the plebes. Oh, by the way, you better call them plebes, as Preston Pish does.
So, well, you know, plebes, we're here to build some generational wealth here. I know I am at my young age, and I know all you guys are as well. Don't worry about the short term. Zoom out. Look at the 1 hour chart. I'm sorry, the 1 year chart. Don't look at the 1 hour chart. Don't worry about it, man. We all know where we're going. Hold strong, hodl strong, and I hope I see you guys soon.
Oh, for sure. And we're gonna look you up in Miami, but obviously not in the bar because that would be a federal offense. So yeah, the outro. Once again, thank you to everyone participating. And it should be obvious through this Toxic Happy Hour episode with the fantastic insights from William Clement III that holding dirty fiat currency is dangerous. It dilutes the value of your savings. Bitcoin is the alternative. One of the reasons is that they print 40% more dollars the last just since the COVID crash, and that Bitcoin is hard capped, the first asset ever the world has seen that is 100% hard capped without any inflation once we reach full circulation. So consider Bitcoin as a better way to store their value. And on that note, thank you everyone, especially you, William, obviously, and our viewers. And see you on the next one. We're gonna do this monthly. Awesome.
Looking forward to it, guys.
All right. Bye for now.
Cheers.